My dear children, in this module, we are going to study the various terms used in connection with depreciation for calculating the amount of depreciation. The various terms are cost of the asset, residual value of asset, scrap value of asset, and estimated useful life of the asset. It is quite impossible to calculate the actual and accurate amount of depreciation. It can always be estimated, though we try our best to be more accurate and correct. Cost of the product or cost of the asset, estimated useful of the asset, scrap value of asset, net residual value of asset. These are the important factors considering for calculating the amount of depreciation. Now we are going to study the term the original cost of the asset. The cost of the asset is the purchase price of the asset. The value of the asset is calculated after adding all the expenses of acquiring, installing, and constructing the assets. We should take into consideration the total cost of the asset for calculating the rate and the amount of depreciation. Then second one is estimated useful life of the asset. The estimated working life of the asset may be measured in terms of years or months or hours or kilometers or output, etc. In case of depreciation, the value of the asset is allocated over the estimated useful life of the asset. If expected life is more, the rate of depreciation will be lesser and vice versa. The useful life of the assets depends upon the following factors. They are, first one, predetermined by legal and contractual limits. That is, in case of leasehold asset, the useful life is the period of the lease. Then second factor is the number of the ship for which the asset is to be used. Then third point is repair and maintenance policy of the business operation. The next one is technological obsolescence. Then innovation or improvement in the production method. Legal and other things. These are the important facts. Another important term is salvage value. Salvage value is the value of the asset at the end of its useful life. Estimated scrap value is the residual value which is expected to be realized even if the asset becomes obsolete. We shall have to make the provision of the amount which is the value of the asset less its scrap value. Now I am going to give one example. Suppose we purchase a machine for rupees 10,000 whose expected life is 10 years. If the scrap value of the asset equal to 1,000, the amount of depreciation will be 10,000 minus 1,000, that is 9,000. 9,000 divided by 10, that is 900 is the amount of depreciation. In the same problem, suppose the salvage value or scrap value equal to 2,000, the amount of depreciation will be 10,000 minus 2,000 divided by 10. That is 10,000 minus 2,000 equal to 8,000. 8,000 divided by 10 equal to 800. 800 is the amount of depreciation. The next point is chances to obsolescence. If the asset acquired is expected to be obsolete within 5 years, we will have to split its value over 5 years. If it will be obsolete within 4 years, the value will be split over 4 years. It shows that the amount of depreciation charged every year will decrease with comparatively remote chances of obsolescence. Then another point is addition to assets. Depreciation should be charged on the addition to the assets. If the book value of the asset or book value of the furniture on 1st January 2006 equal to rupees 10,000, there is an addition purchase of 5,000 are made on 1st July 2006. The depreciation is to be charged equal to 10%. We shall be calculate the depreciation on 10,000 for the whole year and 5,000 for 6 months. The amount of depreciation will be, first we have to calculate the first purchase of depreciation of the first machinery, that is 10,000 into 10%, that is 1,000. Then secondly, calculate the depreciation of additional purchase, that is additional purchase of 5,000 made on 1st July. The accounting period is starting from 1st January to 31st December. So the machinery used for, the furniture used for from July onwards. That is July, August, September, October, November, December. Machinery used for 6 months. So the amount of depreciation equal to 5,000 into 10% into 6 by 12. 5,000 into 10% equal to 500 rupees. 500 into 6 by 12 equal to 250 rupees. So the total amount of depreciation of 2 machines equal to 1000 plus 250, that is 1250 rupees. The equation for calculating the amount of depreciation under straight line method equal to depreciation equal to cost of the asset minus scrap value divided by estimated useful life of the asset. This cost amount includes the cost of the asset, then cost of acquisition and cost of installation charges, etc.